Welcome to Trading Nation. I'm Mike Santoli. Investors gearing up for a sector shuffle. The telecom sector undergoing a makeover, getting renamed the telecommunications or the communications services sector, effective at the end of September, expanding to include media and entertainment names like Alphabet, Facebook, Netflix, AT&T, and Verizon will stay in there. And with the change comes a big opportunity for investors, according to our next guest. Wald is with Oppenheimer. Gina Sanchez is with Chantico Global. Thanks to you both. Ari, what are you seeing in this sector, mix of old and new media here?
Yeah, looking at the sector as a whole, Mike, here, I think a market weight allocation is appropriate. Essentially, that means that we do expect the sector to participate in what we think is going to be a rising market environment still, but we think there's greater alpha potential based on bottom-up selection. So with this in mind, there's two stocks in particular that we're flagging here, breaking out to the upside. One, Take-Two Interactive, the other one, Discovery Communications. First, with Take-Two Interactive, key point here is the year-long breakout above $122 resistance. In terms of levels, that breakout level at 122 is now support, and we think it measures higher to about $150. This is if you take the height of the range projected from the breakout point. Second idea is Discovery, media stock here, multi-year breakout, the key point being at $30. I think this really has created the first higher high for the stock when you consider that it peaked back in 2014. I think it could continue to stair-step higher with upside to about $36. That's when resistance gets a little bit more formidable.
All right, one growth, one value name there. Gina, this sector is still going to really be dominated by Alphabet and Facebook. How would you navigate it?
Well, I think Ari is absolutely right when he says that alpha is going to be driven by stock selection in this sector, because you have everything from securities at 18 times earnings like Discovery to securities at 240 times earnings like Alphabet or Netflix, right? So those are very, very different outlooks, growth outlooks, et cetera. So I think it's interesting that Ari pulled out Discovery, because the earnings trends have been low, and I think that that's been part of the reason that you have had very subdued multiples. 18 times multiple, you're actually below the S&P 500 on that. However, with an outlook for higher earnings later, that could be good. I'm not sure that's in the cards, though. And so I do actually think that this is probably priced correctly. On the other side, Take-Two is an entertainment stock. I think that one's interesting because it's expensively priced. It's more at the 35 times range, but its earnings have actually started to slow versus something like a Netflix that is very highly priced, but whose earnings have been parabolic, right?
And
so
just quickly,
this is
Gina, I was going to ask, just quickly, in terms of the two stalwarts of the old telecom group, AT&T, Verizon, they're still going to be in here. Are they worth looking at this point, Gina?
Well, they sort of are in they're landing in the old tech for right now. I mean, I think really where the growth is in these streaming services. And that's a game that I think is really probably going to drive this sector. However, it's just so richly priced. It's hard to stomach 200 plus times forward earning.
Michael, I'll take a shot at your question there. Looking at Verizon and AT&T really going in diverging paths. I think there's a long-short opportunity. You want to be long Verizon, which has the much stronger trend, and staying away from AT&T, which is still below falling 200-day in a declining trend. VZ over T.
All right. Ari, Gina, thank you very much. Appreciate you being here today. And thank you for watching Trading Nation. I'm Mike Santoli, and we'll see you next time.